It's been a struggle guarding against inflation over the last year, don't we know that? Crypto hasn't been the hedge that some thought it could be. Gold has faced headwinds from the sky-high U.S. dollar, and real estate is a long-term play. Then there's inflation-protected government debt, like TIPS and I-bonds, which operate differently, but both aim to guard you from asset price erosion. On the latter now, since the rate jumped up at the end of last year, there have been over $27 billion in I-bond sales. But is the market still hot? Joining us to discuss is Yahoo Finance's Kerry Hannon. Now, how is this market looking right now? Because I need some inflation protection. How can we get in on this?
We all do. And specifically looking at I-bonds, this is the time to buy it. It's safe, not sexy, right? These are backed by the U.S. government, so you're guaranteed to get your investment back. They follow inflation. The rate is adjusted twice a year, in November and May, loosely based on the consumer price index. And there's a formula they use, but that's the main one. Now, this is important to talk about right now because we're coming up on the adjustment in November. So if you buy these bonds between now and the end of October, they're paying 9.62%. Now, the experts I spoke to expect in November this to drop down to about 6%. They'll announce that probably around October 13th. There's some great things about this investment, but of course there are some limitations. I think, it really is a smart idea for many people to set a little aside here, but here are the caveats that you need to know. There is a $10,000 limit each year. You can play around with that. There are a few ways to bump that up, but essentially it's $10,000. You can't buy these I-bonds in your retirement accounts, right? So you can't buy it in your 401k or for your IRA, that sort of thing. This is for cash you have in other savings, right? And you need to hold it for at least 1 year before you cash it out. And if you cash it out before 5 years, you'll lose a little bit of the interest. So it's not as liquid as some investments might be, but my goodness, it's really a nice, safe opportunity that I think it's worth taking a look at right now in how we approach this thing. So those are just a couple of the caveats. Treasury Direct, this is a do-it-yourself kind of thing. You go right to the U.S. Treasury Department, to their Treasury Direct, and set up an account right there, and you can get rolling. Again, there are ways that you can bump it up maybe by using this. You can buy gifts for your children, nice holiday gifts, and have that $10,000 amount as well.
All right, if I'm buying these as gifts, is the recipient going to get some tax benefits? That's my way of backing into the next question. Well, if I can reduce my tax bill at the end of the year or in April of next year, I'm all about that.
Yeah, actually, this is a great investment for this reason. The interest paid out is free from state and local taxes. Now, federal tax does apply. But again, there are ways, if you cash out and you redeem your bond for higher education costs, there is a way that you can save some on the taxation from a federal perspective, but it has to be for higher education costs. And you can find all those details on the Treasury Direct site in order to make sure you've got it all straight.
And we know you also write about this for us here at Yahoo Finance and the benefit of our viewers. Thank you for that report, Kerry Hannon.